All right, welcome. So let's kind of dive in and get started on this. So we'll be doing this is our second video, technically third, that we'll be putting out on this, but it's the end week review on our micro portfolio that we've got here. Obviously we're in after hours now. It is 3:13 p.m. Pacific Standard Time, Friday, October 3rd. So I told you on the last video that I would go through and build something of a little bit of like an Excel sheet, something that's beyond the visuals. But obviously, there was a little bit of a range in this week's experience, the crescendo of which was probably all this excitement around Tesla that we had on the second. So yesterday, pre-market, followed by a sell-off, and then I believe we had a pre-market spike on the first and the second. So there's quite a bit of excitement on this day. This took a little bit of brain space. And the big question I was asking myself at the beginning of the week that much overshadows really anything else that happened in this was whether or not I was going to sell Tesla. And it looked very, very, very appealing at this point to liquidate my Tesla and then hold until it dip, which would mean holding for a couple of months on the equity that I would have exited in. I think that would have been, I'm expecting there to be we look at Tesla. So there's some pretty dramatic swings, and the bulk of the equity in this portfolio comes from Tesla. But I mean, not too crazy. So we're still up dramatic. I mean, 421 over to 429. I mean, it's still up moderately from mid last month, the last couple of weeks. Just nowhere near this peak, which was really close to all-time highs. If you look at a year, all-time highs being over here. I'm anticipating we get something resembling this going on here. So I think we may end up getting a dip buy that surges back up to all-time high. And if that happens, if we do break all-time high, so that'd be what, 479, or even if we hit then plus or minus $5 of that, I'm probably going to liquidate and then plan to buy back once the price comes down to, I would say this 250, 300 range. That'll be my trigger to start considering buys, is it entering the 250, 300 range, provided we get within striking distance of that all-time high, which we got 460, 479. We got pretty close to that. So that was the big excitement in the week, was come from here to there, and it's just the internal pressure to not repeat the mistake of being over here and thinking, man, if I just was convinced that I should sell here and then rebuy in a couple of months to December, all the way down to March. If I just wait out for a couple of months, let the stock price return to something much more resembling the true market value given its fundamentals and the nature of Tesla investors, I could have almost doubled up, like 50%, added a 50% return simply on just buying back at lower. Doing a little bit of swing trading, but man, it's hard to pull the trigger. Now there's that element of greed that falls into it. So let's take a look at the overview for the whole thing. So I built up a little bit of a report for you guys here. Hopefully this shows up decently well. It looks really pale on my screen. I wonder if I can do anything to fix the appearance of that. I mean, dark mode looks quite decently on my PC. Why does it just look so pale compared to this? Like that's I'm gonna have to see about fixing that. So maybe there's like a filter, effects filter, and scroll sharpen, color correction. Okay, yeah. No. We're gonna do instantly full screen. I may need to. Well, I mean, this is just gonna get recorded raw. So, all right, we'll go into it. I'll do my best to verbalize the day. So we started the week market open. The number I pegged into here, I just went off of I need to learn like the actual market opening times. Week. I don't know. It was the 29th was the start of the week. Yeah. 29. Yeah. I think I went with this. 29, 21, 17. 29, 15, 29. Where did I put 29, 15, 29? Why did I pick 29, 15, 29? Alright, well, I need to make sure I like properly check my numbers again. And pick it from that. Alright. Maybe I was looking at it like this. 29, 29. Weird. No, I think I know what I did. I think I might have done this. Whoops. Okay, so numbers gonna be slightly. This is a comparison of what's 3 p.m. September 26th. Oh gosh, I need to completely redo my numbers. So it's market close. Well, this is an analysis of market close last Friday to market close this Friday. Need to make sure that I accurately do my numbers. So I will do that correctly next time. But in the meantime, this will still give us kind of an idea of how the portfolio moved. It's not just necessarily exactly this week's redo because I think that would require me to completely, yeah, I'd have to do this all over again. So for argument's sake, let's say that was okay, technically 9/26. It's Friday. It's 29, 15, 29, and then at the when I checked, I believe today it was it's moved a little bit. I am 29, 22, 13 right now. I guess it's showing aftermarket. So, but when I put the data in, it was a 29/20/02 for the portfolio. So went through and I created a couple of categories here. So we've got peak value, minimum value. There's going to be net change, equity gain. So it's a whole like the actual cash dollars, the net change, biggest performer, worst performer, what had the largest swings. So this is going to be the like from like the bottom, the lowest price of the stock over the course of the week to the highest price of the stock over the course of the week. So lowest to highest, what had the largest range, and then any like big item overviews such as stocks added, stocks removed, and then reflections from the week's results and let's say what I would change. Uh, just say nothing for now. So, okay. So looking over here, I'll start on the net change. So we had a marginal return over the course of the week, from end to end, $4.73 gain in equity on the total portfolio. So nothing too crazy. There was clearly a lot of enthusiasm, largely driven by my equity in Tesla. There was a point in the week we were at a plus 170. Um, that's a good bit more. That's a solid amount of extra equity. And then at the lowest, we were down $50 at the start. So that's kind of what the highs and the lows look like throughout the week. Obviously, a little bit of drama, mostly surrounding Tesla. Biggest performer is going to be my Planetary Labs. So we'll pop over on this guy. Clearly, you can see in the lifetime gain, we're up 118%. So it's doing really quite well from when I decided to start dollar cost averaging into it. Of course, the week, slight dip onto that was Tuesday, down a little bit, and then it sort of just took off over the whole course of the week. So my numbers for I measured that is about 23.6% up over the course of the week. I think that not exactly sure how this is calculating that, but I ran all my stock analyses through GPT. So Yeah, it's just a quick way of doing the math. I don't really have the time to manually go through, so there may be some slight errors, but largely this is what shows correct. Um, despite the fact that at a particular point in the week, it would have been not my best performer, but delivering the largest return on equity. Tesla was the worst performer this week, down 3.27%. So in my mind, like all the enthusiasm around it had me feel like, oh wow, the Tesla did great this week, even though in reality it's down. But we saw close to all-time highs, so in my mind, I'm like, oh, that's exciting. But the net results, because I did not cash out and sell towards the close to all-time high point, that could have been up a couple $100 and retained that just in equity, and then bought back in later. But we'll see. Fortunately, I mean, since it's a retirement account, I fortunately can trade within the account tax-free. That's something that most people can do in like your general account. So if this was a standard IRA, it wouldn't even be a question of do I sell and then buy back. I would just hold and wait for it to drop and then buy more once it drops. Okay. So yeah, and then the biggest swing, 25.3% for Planetary Labs. So this is just kind of proving to be a sage purchase. I remember back all the way back, where was it? Somewhere around, yeah, I mean, it was April, March of this year. First purchase was in February. I bought it around $5, and then it dropped down, and I continued to dollar cost average throughout this period, which was like super cool. And then to do so, and then it's just gone up. So I think the fundamentals of this are solid for many years. As a particular company, there's a lot of news cycle kind of pushing this, but overall, and you'll see why I purchased a couple of new stocks this week. A slight deviation from my original stated plan at the start of the week, is I wanted to start getting more exposure to the space industry in general. So we'll kind of dive into that. But clearly, like, what a week! What a week! Or sorry, what a year! But in terms of a week, like that's a crazy week for any given stock. So especially when you consider, removing that's a lot of chat. So that was the biggest swing from low to high. All right, let's talk about some fun stuff. Stocks added. So I added Spear, and then I added RDW, and then I added AMSC. So both of these were space exposure. They're much more direct plays. They are satellite manufacturers and components manufacturers. And then we have AMSC, which is energy robotics space exposure, because they do the materials for inputs into these things. It's American Semi superconductors, which I think is going to tie a lot into space and energy over time. Okay. So let's look at those guys. They actually did make surprisingly well. So let's look at Spear. So bought a couple, nothing too crazy. October 1st, 2nd, and then today. So the last 3 days. And even just over that period, it's gone up a fair bit. Up 13 to 13.36. Clearly there's a little bit of a pump going on in this space. I think we're starting to see right, hedge funds, 32,000 shares. Yeah, insiders. Yeah, so here, just read the basics, but they collect space-based data using proprietary constellational low Earth multi-use receiver nanosatellites. Yeah. So it's kind of in the same space as Planetary Labs, right? They collect space-based data. They sell that proprietary data to be used by various companies. I think that sector as a whole will grow. I don't think they're necessarily mutually exclusive. I think you can get exposure to the sector, and that despite the fact they're competitors, I think there's such a market for various types of data that there's sufficient differentiation that you're not, buying one at the expense of the other. I think they'll tend to go up and down in lockstep as opposed to in contrast to one another. So like one's growth doesn't take from the other. So that's Fire Global. Then if we go and we look at RDW, I believe they manufacture satellites. Yeah, manufactures and supplies space equipment and offers. Redwire Corporation manufactures and supplies space equipment and offers critical space solutions and reliability components to next generation space economy with intellectual power for solar power generation and in-space 3D printing and manufacturing. That is a big one. The IP in that space is super valuable. I mean, this is, again, it's a 10, 15, 20-year play, but I mean, it's a negative PE. This is when you want to start buying things like this, right? It's 1.5 billion. This is something that could just rip it and 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 rip it. It's a really, really long play, so I'm not going to pay too much attention to the short swings. This is a buy and hold for years on years. So clearly I got it down a little bit. It's up a little bit. But I think the sector in general will keep going that way. And I think you'll get this dual effect where, like, as soon as SpaceX gets operational, you're just going to get this big pump because in the space sector, because everyone realizes, okay, the biggest impediment to these companies scaling, access to orbit, access to space, is now shrunken massively. And so you're going to get, anytime SpaceX goes up, for these non-competitive launch companies that largely develop craft and items and utilize the value extraction in space are going to go up. So incredibly bullish in this space. So that's Redwire. And this did take a little bit from Tesla and Planetary Labs, but I just wanted to. I stopped investing so much in. I think what I really took from was like the AI purchases. So like Micron is really what I just didn't put money into as much this week. Okay. Let's go retirement. And then there's only one more. I think I put like a very small amount of money into this one. But American Superconductor. I'm just excited for fusion. And I think if you have access to exposure to this, is probably the most direct way to get energy exposure. But energy is one of those weird spaces where it's just not hyper profitable. It's a big thing, it's reliable growth, but it's such a commodity that I find it hard to say whether or not you'll actually get crazy returns. But it's something I think will be quite stable. And at any point at which you know fusion does take off, especially fusion reliant on superconductors, which I think most are in one capacity or another. Aside from like your older architectures, but the newer ones, like your Top Max being produced in Virginia, is based around a smaller superconductor architecture. So I may occasionally buy into this, but I wanted to just have like at least a share, just to kind of have a mental pulse on the market. So yeah, I bought a buck. But these are some new things which I may, depending on the time. If they're having a really bad down day, I'll probably go and purchase some. Cool. So yeah, I think that's kind of the bulk of the results in the portfolio. That's what I added. One thing that I stated I was going to do and that I did execute on is I said that if AST Space Mobile got close to about a break even for me, I was going to sell it. I did do that, and then I parlayed everything I sold from that back into sets. Go. Yeah, parlayed it all back into EchoStar. And again, this is a SpaceX play, in my view, given where the equities come from. I think if this company is to gain in market cap, it's because like half of its market cap comes from SpaceX stock. Like it's got $11-ish billion in SpaceX stock. So I think like what you've seen with MicroStrategy, who holds Bitcoin, it's this like virtuous cycle. Their fundamental business, underlying business fundamentals, I don't think are great. I think there's like $11 billion here that's kind of trash, but it still holds some value. I think they could do a lot by streamlining this business. But I mean, clearly there's the SpaceX deal, and then you get exposure to SpaceX equity, and I think that'll keep carrying it up. So we'll see on that one. It's a little risky doing indirect exposure, but it's what it is. So I sold out of, let's go back to here. Yeah, I sold out of it, 53.46. I think I lost like 75 cents. I was just kind of tired of being in it. It ended up actually kind of aggressively going off the rail later in the week. It might have actually been my number one performing stock had I not sold it and then shifted over to sets. I think I would have gone up about another 20% or $2. But like, I really like to use these micro portfolios to look at my percentages. I don't really pay entirely too much attention to the individual dollar amounts, um, because what I'm trying to do with this is demonstrate, having a savvy investment sense, and I think the percentages illustrate that a lot more so than the total dollars. The total dollars is just a reflection of the capital you put in, and I only put in about 100 or so bucks a month on this guy, just as a demonstration. So that one, technically a miss, but that is where I execute on my original strategy. So two components of my market timing, the choice not to and the choice to, seem to have both been the worst decisions this week. The choice not to sell Tesla at the peak and solidify that $170 market gain, and the choice to sell AST and to lose out on a 20% gain. In the short term, appear to have been poor decisions. So we'll see. So that's basically my main reflection. Is that once again, I think it might have been the correct decision on October 1st, around 460-ish, to sell off the equity. Despite that, I'm holding the swing, but I've already addressed what I'm going to do if it picks back up. Just because I think we're about to head into a really rocky area. If it continues to hang out where it's at, I will just hold on the aspiration that the annual meeting will cause a really big spike. And then if following the annual meeting, there's a really big spike, we'll reevaluate that decision, but I will probably sell off that one. But historically, when they do announcements, the stock seems to drop. So using my historical data just in my own mind, it'll probably just go down when they make an announcement about how good the announcement is. So yeah. Being said, what would I change in the week? Probably nothing. I think I'm solid in my convictions about the decisions I made, and for the long term. In the short term, clearly they are not the most optimal short-term decisions, but this is a long-term portfolio. So yeah, that's pretty much it. So I'll review again at the start of the week on Monday, and we'll kind of assess what we're going to do, and I'll probably try to update this into something more sophisticated and hopefully improve the color so it looks a little better. But otherwise, thanks for hanging out. Hopefully you picked something up useful from this, and I think I'm able to add links in the description now. Not 100% certain on that. But if so, if you want to kind of get started yourself, and I believe that if you click on my Robinhood link in the description down below, that we both get like $5 worth of free stock or something like that. So, and then final thing, of course, none of this is investment advice. I'm not a professional investor or advisor. This is all just my opinion for entertainment purposes and to hopefully inspire others to, go into figuring out and educating themselves on investment themselves. So that's pretty much it for me. Thanks for hanging out. Catch you on Monday.